There is a substantial risk of loss associated with trading forex, binary options, stocks, or equities, collectively, asset classes. Only risk capital should be used for trading. Trading in any asset classes is not appropriate for everyone. Past performance is not necessarily indicative of future results. No representation is being made that investors will make profits or will not sustain losses. Before trading in any asset classes, investors should consult with their professional broker, financial advisor, or financial consultant to determine whether trading asset classes is appropriate. Investors who trade in any asset classes should only do so if the capital used for this purpose represents funds that an investor can afford to lose without adversely impacting the investor's lifestyle. No trading strategy or methodology is without risk of loss. No trading strategy is risk-free, and no trading strategy can guarantee profits or freedom from losses. Investors risk losing the cost to execute any transaction, including associated commissions or fees. You should carefully consider whether trading in any asset class is appropriate for you in light of your investment experience and financial resources. Any trading decisions you make are solely your responsibility and at your own risk. None of the statements or materials in the Auvoria Prime chat rooms constitute a solicitation or recommendation to buy or sell.
The Comical Tuesday, just before 2 p.m. on the 20th. This is the Auvoria Prime midweek software strategy session, which will be quite quick because there's really nothing to talk about until tomorrow, which you can hopefully see on the screen. It's Wednesday the 21st. It's obviously a very, very big day. Will the Fed raise or not, right? So if you're just crawling out from underneath the rock, welcome to the world. Federal Reserve essentially is set to hike its key interest rate by about 75 basis points on Wednesday for the third straight meeting. So essentially with little suspense over the outcome, Wall Street's focus will really be on what the Fed means when policymakers talk about policy staying tighter for long, which is really all that matters. I mean, most of this is already baked into the market as it's been going down a bunch, at least in terms of developed market equities land. But the Fed's projections in June had the federal funds rate ending 2022 at about 3.8%. So any other strong jobs reports and or a hot CPI, as I've talked about on Saturday, when any new projections will likely show the Fed's rate ending at 4% or higher. So if you're not understanding of what this is, the Fed is essentially determined not to repeat its mistake in the 1970s. So they cut rates amid rising unemployment only to see inflation take off again. And they just killed the economy. So financial markets now anticipate a fourth straight jumbo-sized rate hike in November. I think that one remains to be seen. One thing I try not to do is I don't really get caught up in odds making. So when you're odds making, just like any kind of sports book in any casino, sports book in Vegas or other casinos around the world, the key really is just, that they're just placing odds based on a whole myriad of factors, some sophisticated algorithm or whatever. Honestly, at the end of the day, it really does you no good unless you found a way to moneyball it and master these prognostications, right? So I try not to get too caught up in it. I don't subscribe to any of it. I don't have it in any of my news feed flows. Doesn't even really enter. Notice I've never really talked about Fed funds projections, right? I am less concerned about that because if we are going to credit Jerome Powell, federal chair, for anything, it will be that he's been pretty straightforward. So, I mean, he's been pretty clear on what the goal is, right? Now, besides full employment, which arguably we're at, they got to crush inflation. Problem is they're going to have to drag us probably into a recession to do it. So I don't think it's any surprise to anybody. Just note that everything tomorrow around this 2 p.m., I wouldn't trade anything. Honestly, I really wouldn't. I wouldn't trade a damn thing. I wouldn't even trade 3 hours after this. It's just my heads up for you guys. I'll just stay away from everything altogether. So on Twitter, for those of you that love the complete news changingness of what's going on, and the market's kind of talking about some things. I'm just going to go back to what I've retweeted, which you'll typically see me do. I don't really post a lot of content on here. So this gentleman right here, if you're not familiar with J. Kyle Bass, He is one of the smartest guys out there, in my opinion. He is in a very short list of 5 really big hedge fund guys I follow that are very honest and open about what's going on. Now, he is a huge proponent of against China, has been for many years, almost a half a decade. And he also has a really cool office too. Anything that I follow on Twitter is just totally to try and help assess risk, right? Essentially, that's my role, not only here for clients, but all for students and obviously all the Auvorians out there. I know we have a whole bunch of new subscribers, so everybody welcome. I try to do these calls on Tuesday, around 1 o'clock. A little late for that today, right? But at least we're getting the call done. I wanted to kind of see what played out before the end, but I mean, no surprise if we jump back over into Forex. I don't know that the rest of I mean, obviously the purchasing managers index stuff in Europe has some undertones of inflation to it, but honestly, nothing really matters this week. This is it. It's plain and simple. Read it. Sorry. And understand, please. These times are Eastern time in the U.S., so note that. All right. So, the fun fact of today is everybody's favorite governor is put a whole plane load of migrants on the way to Delaware. They're dropping off at Biden's house. So that's going to have some head spinning, which should be quite comedy. Let's go into the markets. S&P off, maybe anticipatory of some more ugliness tomorrow. As I've talked about here, just expand this out. Daily chart we're looking at. But here's the goal. Love it or hate it. This is the goal. Lows, which were made on June 14th, 17th for those taking toll, or I should say for those taking count. So I would imagine at some point we will be magnetized to this area, which very simply is the edge of the cliff. Okay. Notice down here from a market profile perspective, arguably I don't have all the data in here, but there's a cliff in volume down here, meaning that pointing to the left-hand side of the screen, there's an empty notch missing area that more than likely needs to get down and be filled. I was talking about this a while ago, and when you have an area that has gone down, these empty pockets, this may seem strange, kind of see one here, as long as you got a broad, large chunk of data. These are unfulfilled. It's a good way to put this. An unfulfilled or an incomplete auction. Right? This is all auction market theory, which is market profile stuff. You can Google it. I also have a whole bunch of videos up on YouTube from that. You can get to them. Just type my name into Google. Just see I got 2 channels. In any case, that is the low. Not even talking about the highs. Unless, of course, the Fed was to come out tomorrow and say something like the following. Well, we don't think the highs are going to be low enough because we're not raising interest rates. Don't think it's going to happen, but hey, we could live on a hope and a prayer, right? And then everything would just roar right back up. So we'll see. But just note that if you're trading any kind of equity indexes, take a quick look at the NASDAQ here, since obviously it's been weaker. There's no market profile chart on this, by the way. Mostly because I'd rather, actually, you know what, I'd rather look at the market profile chart on the Qs. This is the Invesco QQQ Series Trusts, nothing more than a complex ETF that covers the NASDAQ market. The name, if you're not familiar, is right here. Invesco QQQ. Devil's crazy commercials on TV, as you may see. But it is one of the most actively traded ETFs and indexes on the planet. So that means they have good data. Lots of good data pouring in. So you can take it on a market profile chart, but as you can see right down near the low, see how there's missing notches down here. We have an incomplete auction down here at 278. So that corresponds with the top of 4 candles of the low. So if we jump over to regular NASDAQ chart, let me make it larger. Be right here. It's about 10,008 area. Low, 10,600. What else? Let's jump into currency land. Dollar. Probably going to test the edge of the high here. A lot of people think the dollar was rolling over. I saw a lot of tweets on that. Kind of like it hit like generational highs is one of the tweets. It's about to roll over. I don't see any reason why we can't spend significant time balancing, auctioning high and low all the way through this range, right? I don't see any reason why we can't continue to put in that type of work or break out into a new range. That's what I see. Low 105, high 110. How's it correspond in the US? Euro relationship. Essentially, that would just be hovering around the lows here. Bing bomb, as we go through and just build a base. That's the way I see it playing out. Pound. I don't really see anything other than maybe just a little bit of a retrace and back on down. I think this thing's just headed down. Weekly charts, ugliness, right? Maybe a slight pause right here. This 114 area. Why? It was the flash reaction low in the first quarter of 20 when the pandemic broke, right? All these crazy currency movements then. It's a wild time. Even got a little monthly chart in this thing to see what's going on. This is crazy. See if I can bring this more into perspective. It's not too much here. There you go. I like to be able to see the whole thing. Nuts, huh? Haven't seen these lows. I don't even know when. Which is really a reactionary low back at the 80s area. Dollar was ripping during this period of time as we were storming back as a country, and this was just a huge sell-off during this period of time. Look at this. It's really supposed to be a history lesson, but you actually believe this data from this kind of duration. We're down here in no man's land. There's no volume historically, obviously. There's no price action down here with the exception of here, but we don't have data from that in terms of volume, nor does it really matter. But for what it's worth, the bottom of this all-timeness, never thought I'd say that, is 1.056. You'll see a reaction off that if we can get down there. That's a far distance from here. But ultimately, I think we're going. What else? Take a look, crypto. Went through the other charts over on Saturday if you guys want to know that. Crypto. Let's take a look at weekly on crypto first. These weekly charts really get rid of a lot of noise. So don't pay as much attention to this volume here. It's getting better though, I must say. I just have very little faith in Bitstamp as far as volume data they're supplying, right? It's crap. I could be wrong, but I just think it's crap. Anyway, we're hanging on the edge of the cliff. So if you were to chart all of this data in the aggregate in terms of executed volume, where's the point of control showing up? Essentially, it's right. Keep in mind, this is, you're looking at these dates at the bottom. This is charting the entire move from crypto. Not way back when nobody knew what the hell it was, but essentially when it first started gaining prominence later in 17, raced way up. And I said this was fairy dust. Took a fair amount of heat in the financial media for that. It's okay. I was proven right. Spent many, many years in the doldrums, and then we finally broke out on the crest here. So if this volume is correct, and I'm highly suspect, that should be my new line. If the volume is correct, and I am not highly suspect, then the point of control for this and a target would be this area right here, 83.51. Not saying to buy here, just saying that this is, if you believe in auction market theory and its practical application on Bitcoin's chart, right? That's a highly what if, but who knows? If somebody actually did chart all this and enough people looked at this line will become a self-fulfilling prophecy and you will see a reactionary bounce at this point. I mean, you can't go through it. So, all right. Gold. I know if you trade this, but just wanted you guys to see what's going on. Now, obviously, this is, it's going down because of inflation, all kinds of other factors, right? Rates going up, all that. But if we truly were, totally about to fall apart, don't you think gold would be much stronger? Now I've asked that question in quandary many times over the last 4 or 5 months, but this chart has me perplexed. It really does. But for those looking to buy it, we're right on the edge of the cliff. Next zone of any true sideways trading volume on this would be at this, this is the pandemic reaction. So we've put some work in terms of there. So at that point, it could be something that, you use as a resistance point, possibly support down here. I would expect just under 1,500, but we would first have to crack this area first. What else? This is emerging markets, by the way. These are the brick companies. This is data from ARCA, which is pretty accurate stuff. This is a very, very highly liquid, multi-million traded EEM. Covers the brick countries, Brazil, Russia, India, China. That's why we call them brick. What else? Our new barometer. FedEx. This isn't a new barometer, by the way. I just like to joke that it is. New barometer. Remember I said this thing was headed down, probably down in this area. And we could have probably a pretty solid stop here first. But this really shouldn't come as a surprise to anybody. The real key thing on this is honestly, if we are going to have a true crusher on all of these metrics that are causing recession, right? We have to squelch demand, right? We have to crush it down. We have to put a lid on it, if you will. I know that sounds terrible. We're not looking to crush lives, obviously, but the Federal Reserve has all but said that they have to push demand down to get inflation down, or it's going to get crazy. It is just such a tepid process of getting that fine line between crushing it just enough and killing the economy, right? I can't tell you one or the other is going to happen. I don't know. Very much probably in the fog, as many of you are. What do we got going on here in some of my alerts? See if anything's showing up. I follow just a few people, some pretty good ones. Got some keywords in there that show up. It's such great software, I'll tell you. You'd think that it'd be more of a proponent of the Bloomberg terminal, right? And a lot of people show that in these charts and stuff, but I just I just absolutely abhor paying Michael Bloomberg 2 G's a month to have a terminal when I could almost get what I need here. And if I can't get what I need here, I can pull it off my other trading softwares, or I can call into the big trade desk at Schwab. So either way. All right. I'm beginning to drone on. I said this is going to be a quick one, huh? I was wrong. So wish everybody a great week. And stay safe. Watch carefully. May the trades be with you.